Right, this is the second part of what was quite a lengthy video, an educational video around the TrendPredator Pro, and how I go about identifying the best trade setups for the day using the TrendPredator Pro and the alerts that it gives us, alerting us to all the opportunities, and then it's down to us to do the rest. Okay, as discretionary traders, we're not just going to rely on an indicator. As good as this indicator is, we've got to identify uh, the best trade setups from the bunch on the day, according to how the day is set up, in accordance to the education around the strategy, um, and the flow in the market. Okay, so out of all of these, we were looking in the main at oil and the pound. So here I am on the pound. The pound gave us a lovely set of bullish candles to trade from, based upon all of the bullish momentum in the market, for which the indicator picked up on, giving us a trend trade due to the previous breakouts opportunities. So we had Friday breaking out of Thursday's highs, albeit putting in a high for the week, but then pulling back to give us an impulse correction impulse. So ICI trade, impulse correction continuation. Okay, impulse correction impulse, ICI. And the way that the market was set up today was coiling across the closing price. Okay, and with the market then giving us a dip down to the closing price of support with this beautiful fake out low candle, counter correction fake out low candle, closing bullish. Okay, nice candle that. This is the TrendPredator fake out tool that we use in combination with the TrendPredator Pro. All right, this helps us with our analysis in terms of the candles that we're looking for. Essentially, what traders are trapped, where, when. Okay, so this helps us identify the setups. So we got that nice low into the Wall Street open, and then we got that fake out high of the Wall Street highs, the 9:30 a.m. to 10 a.m. box, which is already identified on the chart, but just to make that clear, that's the box there. So we broke out, trapping traders long, stopped them out before then returning to the intended direction as per the bias in the market across the time frames, monthly, weekly, and daily, because daily Friday was a bullish close. So we assume while we're inside of Friday's range that we are bullish, and we will continue with that bullish close, considering the underpinning bullishness on the weekly and monthly chart. Okay, so not rocket science, we're just trading with the trend that is your friend. And due to that fake out low, we got a nice breakout candle, switch candle over here. So this candle here was a switch candle, which led to a breakout, a strong breakout of the Wall Street highs. Okay, and then a dip back inside before then continuing later in the day for a beautiful setup to go long. The timings of this were around about 11:15, so just into that fourth hour, which we used to trade as our sort of final hour for looking for opportunities. Okay, you could have taken the market on outside of the Wall Street highs. I mean, you would have got better value for your money in doing that, but you were still below the Asian highs, so that's still technically risky because you're still in a downtrend. Even though we're bullish on the candles, we're still technically below the Asian high, so that's still a resistance. So just draw that in there. So all of that there are traders that are trapped trying to go long. Okay, the breakout, but they've been pulled back inside, and this market could easily have kept going into Friday's length below the lows of Asia for a stop hunt. Okay, I say easily. I mean, we actually had monthly breakout traders pushing this market up. So I wouldn't say easily, but it could have done. So that was the risk. So needing to wait for the break, at least of Asia, and then it would have been difficult to have got into the market otherwise, because it was a very strong move that took us up to the highs before then dipping. Okay, so a bit of a correction in here before moving out of there and into the trade on these signal candles. So we got a nice fake out low on this candle here. So that was a nice, as we're rolling through that Asian high, to have got into that market for a nice 3-to-1 opportunity up towards the highs of the day, with our stop loss below the Asian highs, in anticipation that if it were to come back in a stop hunt, then if we get below the Asian highs, then perhaps we're getting faked out and we're better off out of the trade and reassessing things. But it didn't come in below the Asian highs and continued up. So there's money on the table there to be had. It's a very creeping day. I would expect that it would take out the highs. It may not. So anyway, we'll leave that there to run, having taken some profits. If that would be your strategy, trade management strategy, to take some off. So that's sterling. It was identified in the prior video, for which I'll link to this video in the description. It's a lengthy video because it's for educational purposes, as is this. And then we were also looking at oil. If I can get to there, hold on. Don't know why it won't let me out of here. Into oil, please. There we go. Right, so oil, similar scenario in some respects to sterling, in that we were using the Wall Street Open as a guide. Okay, the difference being is that we had that momentum from a breakdown at the start of the day, and we're simply pumping up in what was a breakout scenario. So we're fake out low and breaking out of the Asian highs, similar to the sterling scenario, looking for the continuation up. Okay, and we had the weekly and daily chart aligned. All right, and then the breakout of the Asian box, and then breaking out again of the London box here. Okay, so the sessions. And this here was a beautiful trap in terms of the Wall Street Open, in that we rallied into the open, taking on the Asian highs. You've got breakout traders in the market and in anticipation of a rally, but it needs to pick up some supplies on the way there. So we pumped. So look, so we came into the Wall Street Open, we dilly-dathered around within that half an hour gap. Do it on a 5-minute chart, be easier to see that. So we're just sort of bouncing in and out of there. We don't want to be doing anything inside of that. We want to be trading from outside or outside in. So rallying up, that's trapping traders going long. Okay, trapping traders going long. And then it dumped in a stop hunt. And then that was the fuel for the pump. We weren't doing anything until, as you can see, the alarm was set, until we're outside of the other side of the Wall Street range. And we're looking for a break of the highs to instigate a move out of here. Stop further in for a 3-to-1, up in towards the value area. The point of control from Friday. All right, so yeah, there we have it. So that's an explanation of the oil. Now, interestingly, what we had was this beautiful fake out low to the downside, and this switch candle. Sorry, I say fake out low. Bear with me. Yeah, so on the 50-minute chart, you'll see that as a fake out low of the Wall Street Open. So bang, bang, and then a strong move to the other side. That's your ammunition there. Picked up the supplies from below to continue onwards. Okay, so for further education, I'd suggest going back, watching the video prior to this trade panning out, or at least in its infancy at the moment. A bit tricky now around that 4-hour high. Pretty late in the day, I suppose, as well, but it could be held on. Let's see if we get up to the point of control. But as I said, education in the prior video. I'll link it in the description. This is education around the TrendPredator Pro and the approach to day trading using the TrendPredator Pro, as well as the fake out candles as the final piece to the puzzle. Well, somewhat, in that you still need to identify when the TrendPredator gives you a signal across your watch list. So you've got a watch list for the whatever session you're in. That's my watch list for New York, my go-to instruments, and then you set it up, the TrendPredator alarms on that watch list, and it throws them out as and when you get a setup thrown to you on a plate, given to you on a plate, and then it's down to you to identify the setup, or your timing window first of all. Mine's from 10 a.m. As I would advocate for anyone really trading New York, to let the Wall Street box play out, the traps set, and then let the market show you its hand in what it intends to do for the rest of the day, as per the TrendPredator indicator. But then it's down to you to identify the best engineered chart so that you're trading with enough flow and momentum as per the typical formations that appear week in, week out across the days of the week. So in this instance here, we had a scenario where we've got 3 weeks of drop. Okay, that's fueling the appetite for a short squeeze. There's a lot of shorts in that market, so maybe a shakeout is on the cards for the rest of this week, squeezing up into where we came from. Got the previous week's highs over here. All right, and how we were set up in that we've been working the low of last week. Okay, and we were simply popping back up inside of the prior day's lows. Okay, and a higher high on the inside of that range led to a dump and pump situation. So more or less one of these. So impulse, correction, continuation inside of what was that, Thursday? Yeah, Friday, Wednesday, Tuesday. Hold on, Friday, Thursday. Yeah, Wednesday. Inside of Wednesday's lows there. That was the resistance, respected, dump and pump for a retest and breakout up into the point of control, taking on last London's support as well, and the inside of the value area of Friday. Okay, like I said, all the other information will be posted in the description. A free trial period of the indicator that gives out the setup signals. And for further education, reach out to me. You'll get the education from me at FX Street Premium Services.